What's up, everybody? Good morning. Welcome to Trading with Bubba. And of course, the markets kind of still stink, but there's a little bit more activity. There's a little bit more things to think about. There's a little bit more excitement. And as we take a quick look at what's going on, we'll start with the futures market. As you're watching here, you saw a big spike up in the Dow. You saw a big spike in the Russell, which is still actually going, a big spike in the NASDAQ, which failed, and a big spike in the S&P, which is kind of hovering. So we look at this through the phases of the market lens. We had a spike to the upside in the Dow, now consolidating. The Russell is still going higher, which means if we can get some volume, we'll look for a place to sell. The S&P, very much like the Dow, because they're actually pretty related in consolidation, and the NASDAQ is forming a V, straight up and then right back down. So when you look at these patterns, the good news is that we're seeing some more activity. That's the good news as we look at these markets. Here, like look at the euro currency, same thing, straight spike up and then a V, right, or an upside down V. So when we look at these markets, these are what we talked about in the phases of the market when we look at them, because these are all potential opportunities. Now, I'm not telling you today is the right day to really start getting involved, but what's exciting about the action today is suddenly we've got some business, okay, versus not having any business. The last couple of shows we did, there wasn't really anything to do, so there wasn't much to talk about. Well, now we're starting to see a little bit of activity. So if we look, for example, into some of the things that you might want to use options on or futures, I trade them all, so it doesn't really matter. Excuse me. And the spiders, I'm still looking to sell call spreads. Now, you notice that we talked about selling call spreads last week and the week before. We have yet to violate the top end, which means that those call spreads are cashing. Now, again, you're not going to get rich when the market doesn't have any price movement, but you can certainly grind out some small profits. And remember, every day is not a day where you make a lot of money or where you get big hits. There are losing days, there are winning days, but there are days that there's a lot of activity, and there are days when the action is light. And when the action is the lighter the action, the more conservative your trading has to be. Okay, you have to you're playing. If you look at the markets as a big giant probability model, that's what you're playing. Okay, so if you look at this, hold on, let me flip you over here. If you look at here and see the resistance level, we're stuck here. Okay, so the trade to make here, if you're going to make a trade, is to sell premium, sell the credit. Okay, which would the only right sell here would be to sell the call side, because you're up into resistance, looking for it to fail and come back down to, we're at 455, looking for it to come back down to 451. But we don't need 451. We just need it to stay at, let's say, 455 and a half or below. We get to keep the credit. You can do this on a daily, every other day, or a weekly basis. That depends on how active you want to trade and how much exposure you want to take to the market. Okay. But again, if you're watching and you're focusing on these types of patterns, you'll see them everywhere. And as you look at so now we look at the NASDAQ. Now, interestingly enough, as we looked at the Dow that was at resistance, where is the NASDAQ at? The NASDAQ is at support. So what would I do in the NASDAQ? I'd be looking to sell potentially some put spreads. Okay. Again, you're not trying to predict what's next. You're using the market, the footprint that it leaves, and the opportunities that it potentially creates. Now, I'm not all that thrilled about the overall action in the market right now in general. Again, I would say that overall, for me, it's easier to kind of sit it out and wait for a better opportunity. You know, we're in a market that is higher. Now, again, should it be higher? Well, it should be, because it is. We can't tell the market what to do. It's higher. That's all we can really identify with, is that it's going up. But we can still play either side of the market depending on where the security or the future or whatever the product that we're watching, where is that at within its own cycle. Okay, so credit is one of the ways to sell. Now, this time of year, basically the way that I look at it, there's about 13 days or 13 and a half days, if you count today, left of the trading year. Yes, there's another 10 days afterwards. However, to me, after the triple witching expiration in December, which is 2 weeks from Friday, the year is over for me. And as a floor trader, I never worked the 2 weeks between Christmas and New Year's because there wasn't the action. Now it's been a very, very rough year from a volume standpoint. We get in these low periods. Let me go back to the chart here and notice you see the NASDAQ or the Qs keep falling in volume. Okay, you've got the spiders keep falling in volume. You've got the IWM keeps losing volume. So that creates a bigger challenge, anyways. But as we look at the Russell again, so if we were a seller of puts spreads in the Qs and the seller of call spreads in the spiders, what would we be here? Well, the easy answers would be seller call spreads. Why? Because we're back at resistance. Again, you're playing the pattern. The market creates patterns. I don't care what you want to say. The market creates patterns. Okay, you can see it happening here. And one of the exercises that you can work on your own is to use short-term time frames, not necessarily to trade off of, okay, but to learn to identify the patterns as they appear. So if I'm looking at this, I can see that the spiders, even on a short-term time frame, are up at resistance. Okay, I can see that the Qs or the NASDAQ, which is the same as the Qs, came up from support. Okay, I can see that the Dow is at resistance, and I can see that now the Russell has formed that resistance level. Now we saw those in the longer term chart for time frames, but now we can learn the lesson faster on the short term. Because again, if you understand what universal price is, it is known as, what the hell is that? Okay. We know that all charts are the same, all patterns repeat themselves, and the shortest time frame has to resolve itself into the longest time frame. Okay. So we know all that. Okay. So if we use the market to our advantage, okay, then we can make better decisions, higher probability decisions when we're looking. Okay. Now I'm looking here, as long as I'm here, I'm looking for a potential trade while we're together. You know, we've made a number of trades together for those who've been around since the beginning. And maybe I'll make a trade. Again, listen, I'm going to make a trade if what I'm looking for is going to show. And what I'm looking for now to trade the futures market, although many of you may be options traders, what I'm looking for now to trade the futures market is I'm looking for a spike in volume and either a spike or a big drop in price. I did sell the NASDAQ right here. Okay. And I did buy it back somewhere down here, not all the way at the bottom. I'm never going to sell the top or the bottom because what I'm going to do, if I'm trading on this short of a time frame, this is my trigger time frame or my identification time frame. This, the 1 minute, is the frame that's going to tell me when to go ahead and make that trade. Okay. Now I do this on 4 minute and 1 minute. I do it on hourly and daily. And again, that is something that, again, it depends on how active you want to be. So during the day, trading futures, I want to be as active as I can. But right now, there is no trades that are setting up for me to look at right now. There's nothing for me to do right now. Okay. So I'm still just watching and observing. So all I'm going to do now is start going back, and I'll go back and start looking at some charts just to see if there's something to do. Okay. And if I see anything setting up, and of course, with no volume, there's nothing to looking at Apple. It's really just in consolidation. Amazon, there's really nothing to do. It's in the middle on no volume. Coin. Now, coin is one that you may want to look at a potential short. Now, I'm not recommending any trade, but this would be one that if I were going to make a trade here, it would have to be to the short side. Why? Because we've gone straight up in a parabolic fashion that cannot be sustained for any real length of time. Yes, could it go up again today and tomorrow? Sure. It could go up the next 5 days. But at some point here, this stock is going to become very overbought. Okay, it probably is right now. Let me just flip over to this chart and I'll show you, even though I don't use these because I can read this. I've already told you what they are, but I'll let you identify it and see it from the Bollinger Band views. Okay, so you can see that it has been overbought for about 8, 9, 10 days. Okay, that means that there's going to be some mean reversion here. Now, again, if you understand the math behind the market, and if you understand how the Bollinger Bands are designed, okay, the mean is the green. Okay, now the mean will go with the market. So if I just sold it at its first sign of being overbought, it had been down here. Okay. But notice, okay, that it never came back to the mean, number one. But even if it comes back to the mean now, okay, the mean is up here. So it'd be a losing trade. So again, it takes a fine look at not only knowing that it's overbought, but then having a reason to pull the trigger to either get long or get short on an overbought or oversold conditions. But right now, this is showing me I'm not going to chase momentum, because if you're chasing momentum, where's your exit point? We don't understand. It's harder to define an exit point unless you're just going to say, I'm looking for a buck or whatever that number is. I don't trade that way. To me, it doesn't work. So for me, I'm looking for a reason to sell. Okay, I'm looking for a reason to get short. Now, I don't have it yet. I'd like to see a little bit of an explosion in volume, okay, which would mean to me that the last of the crew has bought, okay? When you get that big spike, what's called the blow-off pattern, that usually indicates that the last buyers or sellers, depending on which way we're going, have stepped in and have made their bed, and then it should go the other way. Okay, as you saw in here, okay, as you saw here, where it's holding. So again, what we're looking for in a shorter term trade or on a blow-off trade is a V shape. Okay, the V shape recovery or the V shape break. Okay, but right now, again, you can see that volume has kind of slimmed down and it's very light. So there, again, there's not much for me to look at right now and say, oh, well, let's make this trade. I don't see a trade right now. So I have to just sit back and relax. So now I go back and look. So I know here's one that I'm keeping an eye on as a potential sale. Meta, stuck in consolidation. Google, stuck in consolidation. Okay. IWM, stuck in, we already know that. NVIDIA, okay, in the consolidation. All right. So again, it's that simple when you look at the market cues in consolidation, but at a point where I could actually sell some premium. The square is breaking out, but it's breaking out of no volume. So it does not trigger a trade, but it's another one that I might be keeping an eye on. Okay. The SPY we know. Tesla, stuck in consolidation. Win, stuck in consolidation. So you can see that we just looked at 15, 20 stocks and 7 or 8 futures. There's nothing to do. Okay, so again, the key in markets is not only the ability to trade them, but to have the patience to wait for what you're looking for. Okay, so we're just going to watch. I'm going to go back to the futures chart. This is the greatest probability of creating a trade right now. Okay, because I don't trade equities on a short-term time frame. You can't overcome the bid-offer spreads, and of course, depending on how much you have in your account, some of you can't do the day trade. So the Dow is starting to charge and break to the upside here. Okay, so let's see what happens. If it would give me some volume, it would give me some volume up to about 4,000 contracts. I'd be a seller. But right now, the volume is not participating. So the lack of overall participation in the market is keeping me more or less on the sidelines. I think what you have to remember, okay, is that, hey, if I'm patient, if I take advantage of the probability, if I put myself in the highest probability position to win, then I'm going to make better trades. If I chase the market around, then I'm not done yet. Put me back on my other charts. I'm making a point. Anyway, just kidding. But if I'm looking at this, okay, I have to be able to have a reason to pull the trigger. Okay. Again, just to trade, you're not doing yourself any favors. You're putting yourself in jeopardy. And right now you can see the lack of activity is keeping me away from trading any of these right now. Okay. I do know that, again, I have some things I'd be watching. I'm watching the Dow futures right now. I'd be watching coin. I'd be watching Square. But again, if they don't do exactly what I want to give me an entry point, then what's the point of entry? Okay. Again, we don't get paid for the number of trades we make. We get paid for making winning trades. Okay. Now we know every trade cannot be a winner, but we have to manage our risk to start with. Because if we don't manage the risk, then what are we doing? Then you might as well just throw your money in the garbage can. Okay, because if you don't sit there and manage risk and take good care of your dough, then you're only putting yourself in jeopardy. Okay, and we don't want to be in jeopardy. We know that even if we do everything perfectly, there's still risk. Okay, now if we were really, really busy, I might look a little bit closer at this Dow trade. Okay, but we're not really, really busy. Okay, I mean, I traded this morning live with my members in the futures. We had two trades. They both made money. You know, they weren't big winners, but they both made a little money, but there was something more to trade. I'm not getting the action that's going to trigger a trade for me right now. So if I'm not getting it, now this is something to remember. If you're not getting it on the short-term charts that we're watching here, well, then I know I'm not getting on the longer-term charts. If I'm not getting the action, because every market has to start with the shortest time frame and work its way forward. So if I'm not getting the action here, then I know for sure I'm not getting it anywhere else. Okay, it's a mathematical impossibility. If there's no volume in the 1 and 4 minute, how much volume is there going to be in the daily? It's got to be less. Okay, it's got to be lower than normal. So I need to see some action here, and I'm not getting it here. So where am I going? There's nothing for me to really get too excited about, nor to run in and try to fire and trade it. Okay, so that's, again, the hardest part about trading is staring at the screen and not making a trade. Okay, and I'm telling you that you're going to be much happier and much better off if you learn to either walk away and not worry about what you might miss, or you learn to study during these very, very slow times, because there's a lot of clues that are being left. I just showed you as I went through some of the charts, things that I'm watching for, but they are not trades. Just because I'm watching for them, I still need other parts of that event to occur. If those events do not occur, then there's nothing for me to trade. Okay. And until there's something for me to trade, and it's hard. Trust me. Listen, I've made plenty of mistakes. I've blown plenty of dough on stupid trades, okay, that I shouldn't be in the first place. But at the end of the day, the harder you work at disciplining yourself to stay away, yeah, you'll miss a trade here and there, but you know what you won't miss? You'll miss a lot of the losers that you used to take, okay? And so think about it from that point, okay? Yeah, you'll miss a winner here and there, but look at all the losers you're going to miss that you used to make all the time, because you felt yourself compelled to have to be involved, okay? So as I look back, okay, we'll give you one more quick view here before we cut out, because there's not enough to really go over. So the euro currency looks like there's something happening. We're going to watch it for a minute. I don't know if it will get there or not. I need the euro currency volume to get up to here. Okay, it's got a minute to do so. If it gets there, I will make a trade. Again, you know, if you've been around, I've made many trades here, and I'll make another one right in front of you. I don't care. It's real money. It's not fake money. I'm trading with real cash. Okay, I've done this my whole life. So, 45 years in this business, and still trying to learn something and still trying to trade it. But again, obviously, it comes back down to discipline and the ability to say no. Okay, now I could certainly force this trade, but it's not going to qualify. It ain't going to get there. I can already tell you. Now I'm going to watch it through so you can see. There's no way it gets there, where I need to get to. And again, the components of the trade I'm making right now are price and volume, not one or the other. They have to both coincide, because that signals that everybody's loaded themselves in either to the long side in this case, or to the short side on the way down. And right now, you can see it didn't make it. It didn't qualify. Pass. That's no trade for me. And I guess that'll say we'll pass the rest for today. We'll see you back here on Thursday. Of course, if you're not aware, I do the Market 120 every day. Quick, about a minute and a half or 2 minutes every day. If you haven't seen that, check it out. In the meantime, this is Trading with Bubba, brought to you by Wealth Charts and Tradier. Have a great day, everybody. We'll see you later.